Today, I will be revealing my $50,000 stock market portfolio. I will reveal every single stock I own, as well as their business model. You'll get to see how much of each stock I own and how much I'm up or down on each position. You're also going to get to know the main reason why I invested in each one of these stocks, as well as if I plan on buying, selling, or holding more of these shares. We're also going to look at how much money I have made or lost in total since I began investing in December 2018. That's about 2 years ago. So the purpose of this video is to be as transparent as possible in order to achieve the trust and respect of everybody viewing this video. Before we get into that, I have two very quick announcements. I got a new camera and a new mic. The mic quality should sound significantly better, but I'm still learning how to use the camera and get the best picture out of it with the best settings. So it'll be a little while before I can get the lighting right and everything, but this is what we're working with right now. Secondly, I just want to say thank you all you guys watching this video for 100 subscribers. I know it doesn't seem like a lot, but to me, it really means something that I was able to get this many subscribers. I didn't even know if I was going to be able to get like 50, but 100 is a lot. So thank you guys. I really appreciate that. Let's start talking about the total amount of money I've lost or made since my investing career began. So without further ado, let's take a look at this. What I'm about to show you is the realized profit loss for each year I have invested calculated by Ameritrade. So these numbers are accurate because they're what I would be paying taxes on each year. Basically, Ameritrade calculates these numbers and said, okay, you made or lost this much money, so therefore you have to pay this much taxes, right? So these numbers are very accurate. So taking a look at the first screenshot, we see that I made $0 in the 2018 tax year, right? I started investing in December 2018, so I didn't really sell any stocks. I probably bought a couple towards the end of December 2018, but that's really where everything began. So moving along, looking at the 2019 tax year, taking account all the investing and trading I did, I made a grand total of $32.79. So in 2019, I did a lot right, but I also did a lot wrong. The main thing I got out of that year was everything I learned, all the lessons I learned. That was basically it. I didn't really make much money, but I was learning more and more about the process of investing. So that was my first year. Lastly, for the 2020 tax year, which was this year, I made $7,503.77 in realized gains. A couple things to note. A lot of the investing for me didn't really start to come together until the summer of this year, the summer of 2020. Right? At that point, everything kind of started to make sense. I started putting all the puzzle pieces together. All the research I had done, all the videos I'd watched, lessons I had learned, I have basically all these formed a solid foundation for me, and I could put them all together finally in the summer of 2020. So basically on the back half of my second year. So since then, I fully researched and understood every company I've ever owned. I never buy anything I haven't fully researched and I don't fully understand, and that's just kind of a good habit that I've developed over the year or so, or over the couple of years that I've been practicing investing. So now that we got that out of the way, let's talk about my portfolio. Basically all the stocks I'm holding currently and I'll be holding within the next 6 months, year, 2 years. We're going to go over what I'm doing for the future, okay? So I have two accounts. I have my main account and then my neglected account that I made for YouTube. You probably saw that in some of my earlier videos, but I just kind of forgot about it. I mean, I didn't forget about it, but there's a lot of stuff going on, like school and finals. Sorry if you can hear that. It's my dog. So we're just going to lump everything together and call it one big portfolio. So the first stock on this list is Nordstrom, ticker symbol JWN. Nordstrom is a high-end clothing retailer mainly located in malls. Now, I took profits on almost all my Nordstrom shares except for the ones that I hold in the YouTube account. So the position is really small. As you can see, I have $156.90 in Nordstrom as of the screenshot, which was this morning. And I'm up 146.39%, or $93.22. Nordstrom was a comeback play for me. That's kind of like why I got into the position. During the time I invested in Nordstrom, all the stay-at-home stocks were booming. I'm talking like Netflix, Zoom, etc. Everybody was just buying up those kind of stocks. And anything that was related to malls and physical retailers was just tanking. Nobody wanted them. They were all at like all-time lows. Like people just did not want them. So I looked at Nordstrom, right? I saw they had a growing business model pre-economic disaster. I saw they catered to high-end individuals, which were the least affected by the crisis we just went through. And I just believe the whole Rona thing was just kind of overblown. I mean, yeah, it was scary, but I felt it was more scary because of what the news was doing and what the media was doing. I didn't think it was that serious. I had been seeing people go to malls, go shopping. People were out and about all over the place. What I plan on doing with this position, it's really small and it's in the YouTube account. I just plan on holding it. You know, we're just going to see where that goes, maybe collect some dividends. The account's really small, so I'm just going to leave it and let it run. So stock number 2 is Upwork, ticker symbol UPWK. Upwork is a digital marketplace that connects freelancers to clients looking for skilled talent to complete a specific task. I've also taken some profits on my Upwork shares, kind of like Nordstrom, but I still hold the majority of my position. So I own $3,908.63 of Upwork, and I am up 138.95%, or $2,272.90. So Upwork was a play on the freelance economy, right? This company has and consistently has grown revenue year over year by 20% plus. And they have a massive total addressable market. I mean, if you look at the total freelance economy, you're looking at hundreds of billions, if not trillions of dollars, right? So when I started buying this stock, all the attention was on Fiverr. When it came to freelancing, everybody was talking about Fiverr. And this company was trading really cheap, and they were basically doing the same thing, if not a better thing, because Upwork was focusing on bigger clients such as like Microsoft, Zoom, and getting them freelancing talent. Fiverr's more like a casual, like for everyday, you know, people just want to get a drawing done for the grandma for Christmas, you know, something like that. So I definitely plan on holding the stock for the long term. I took profits earlier, but that was to raise cash. Really, the total addressable market for this company is so massive that I feel like holding the stock is a necessity. So like I said, the market opportunity for this company is too great, and I'm just going to go ahead and hold. So stock number 3 is Revolve, ticker symbol RVLV. Revolve is an online fashion retailer that focuses on the younger generations and their taste and style. So they market their products through social media and social media influencers. I have about 5,135 or 5,133 and $55.55, of Revolve, and I'm up 93.81% on these shares. So Revolve is an e-commerce play. They have a fantastic balance sheet. They have a very solid cash flows, and they market to their audience through social media influencers, which is really kind of new age. That didn't really start happening until relatively recently. And so, like, what's not to love? I mean, they know exactly who they're marketing towards. They knew who they're making their products for, and everything's just kind of coming together, and they're super profitable, and they have some great cash flows going. So, like I said, this company is very profitable, and I believe it will have a ton of growth in the future, capitalizing on basically what are the up-and-coming fashion trends. So I also plan on holding this stock. I don't really need to rush into selling. I like it for the long term. They're a very profitable company, so I might as well just keep holding. So stock number 4 is actually a stock I acquired relatively recently. I think it was my second 2 videos ago or 3 videos ago. Stock number 4 is Corsair, ticker symbol CRSR. Corsair is a PC gaming component and accessory developer and manufacturer. They are widely known and respected in their sector, especially for products like high-end RAM, power supply units, and cooling solutions. So I own $7,999.78 of Corsair, and I'm up $1,814.01, which is about 29.33%. The main reason I began a position in Corsair is because of how cheap the company was trading relative to their competitor. Their main competitor is Logitech, right? And Logitech has a price to sales of 4+. And when I was looking at Corsair at the time, they had a price sales of under 2, which was just super cheap. And I know Corsair is just as respected, if not more respected, than Logitech when it comes to video gaming and gaming products. I also got into it because of its market dominance. Like I said, they're dominant in RAM, power supply, cooling solutions. They're number one in those three categories out of the entire competition, right? And I also wanted to be exposed to the gaming industry because that industry is supposed to grow by nearly double digits for the next 5 to 7 years, which is really, really good for any company related to gaming. And it's always good to be in a growing sector. So I definitely plan on holding Corsair. It was a recent acquisition by me, or a recent new position I started. And if it stays floating around $35, I'll consider adding more. Since I got into the position, I've been eyeing a price target of $60, and I really think it can get up there. But for now, I'm just holding, unless I can see it take a significant dip under 35, and then I'll be adding some more. So stock number 5 is Dropbox. Dropbox is a cloud storage company that is constantly evolving their product to be more and more attractive. I mean, Dropbox is doing things like redesigning their application for team collaboration. I don't know if you've seen Dropbox's desktop app, but it looks a lot like Discord, which is super easy and efficient to use. Dropbox has also acquired HelloSign, which is a direct competitor to DocuSign, and DocuSign has tens of billions of dollars market cap, and they're going after a huge market. And if HelloSign can capture just a small fraction of that market, that's going to be huge for Dropbox. So including options, I own a total of $9,755.90 of Dropbox, and I'm up about $1,567, or 16%. The main reason I invested in this stock is because of how cheap it was, right? This company has very consistent growth. They have recurring revenue. They have a fantastic balance sheet with over $1 billion in cash. They're regularly innovating, like I said, HelloSign, and changing their desktop app up. And they had a forward PE below 25. When I was buying the stock, it was a steal. It's still pretty cheap now, but it was really cheap back when I was buying it under $20. So I plan on holding Dropbox. I have a decently large position, but if it falls under 20 again, I'll consider adding more. Stock number 6 is Facebook, ticker symbol FB. Facebook is a social media beast, right? Owning the Facebook, Instagram, Messenger, and WhatsApp and Oculus names. So Facebook makes most of its money through digital advertising, and they're also regularly innovating to keep up with other social media platforms. For example, you saw TikTok. TikTok started to blow up. What did Facebook do? They introduced Instagram Reels. You remember when Snapchat first came out, they had stories. Guess what Instagram did? Released Instagram stories. You know, Mark Zuckerberg and everyone at Facebook is just constantly looking for what's the next big thing and how can we incorporate that into our applications. So they're all also, on top of that, they have like Facebook Marketplace, they're getting into e-commerce. Facebook's doing a lot of things behind the scenes that nobody's really talking about, and the stock price hasn't really reflected any of it, which is, you know, it's going to reflect it soon. So the company's super profitable. They have a ton of growth. I'm talking 20% plus revenue growth. And it's one of the cheapest big tech stocks you can buy. Its forward P sometimes drops below 20, which is just crazy in my opinion. I mean, that's definitely a steal. The main thing holding this company back is regulation. But even if the company gets broken up, right, I see more shareholder value, you know, coming out of that scenario. This is because shareholders will get an equal share of each company if Facebook were to be broken up. And then there would no longer be the fear of those companies getting broken up because they're already small. So there'd be nothing to hold back their valuations. They could just go crazy. I like Facebook at this valuation. I was planning on getting my position to $15,000. But, you know, if it stays around 270, I'll do that. If it starts taking off, I'll kind of just sit back and chill with what I have. Now, the last stock I hold, I just covered in my last video, and it's Celsius, ticker symbol CELH. Celsius is a company trying to change the perception of energy drinks. They have created a healthy energy drink backed by clinical studies and contains no sugar, no artificial colors or preservatives, no aspartame, and has scientifically proved health benefits. I own $12,108.23 of Celsius, and I'm up $2,041.91, or 20.28% as of this screenshot. So the main reason I invested in this company is because of its massive potential. It is completely changing the way energy drinks are viewed, which can convert thousands of coffee drinkers into possibly Celsius drinkers. They're already growing revenue. They grew revenue last quarter, I believe, at 80% plus revenue growth. They're already profitable. They have no debt. And I built a very large position very quickly. So I just plan on holding this stock. And I just want to let you guys know, out of the last couple stocks I featured in my videos, Corsair and Celsius, I've been doing really well with those picks. So if you followed along, you're probably also doing pretty well. I'll be calling out more and more stocks as I go on and make more videos. That concludes the entirety of my portfolio. I just want to say thank you guys again for 100 subscribers. If you liked today's video, please drop a like, comment, and subscribe. And I'll see everybody in the next video. Have a great day, guys.